People wonder who is buying all this gold each month. We see billions of dollars entering the COMEX every week. Smart people like Vince Lancy, who is one of the brightest in the industry, point out that 85% of the gold bought by central banks is not reported to the IMF. Countries like China are bringing in gold in the form of concentrate. As Sean Kun from Dolly Varden explains, miners in Latin America and Mexico extract gold and silver from the ground in concentrated forms. They ship it back and refine it on their own. Well, that doesn't start the IMF reporting. It's less than 999 fine. Global markets are changing in ways that many investors are not ready for. Beneath the news, billions of dollars in gold are moving into the COMEX each week, with a lot of it kept secret from official reports. Central banks are buying doré and concentrate directly from miners using unconventional methods. They are working with proxy banks and using sovereign wealth funds to avoid IMF disclosure. At the same time, major institutions that used to focus on bonds are now shifting their investments to precious metals, indicating that trust in government debt is decreasing. This increase in unreported and unusual accumulation points to something bigger, a possible reevaluation of gold and silver at the heart of the monetary system. Andy Schectman, a key figure in the precious metals industry and CEO of Miles Franklin, has frequently pointed out how these hidden movements are changing the global financial system. His view shows how central banks and treasuries are operating in the background, and it also explains why silver, which has just been named a critical mineral, might be close to a significant rise. We now show the clips from Andy Schectman's interview. Before we move on, please subscribe to our channel and turn on the bell icon for updates. Thank you, and have fun watching the video. Cutting interest rates in a time of rising inflation is challenging, especially since the Consumer Price Index (CPI) has been over the target of 2% for more than 53 months. Additionally, the unemployment figures have been revised, showing nearly 500,000 jobs adjusted this year alone, not counting the earlier revisions. I believe it's a weak market. It's the understanding that we have preferred inflation instead of cutting spending and fixing our finances. And maybe the world is finally realizing that holding treasuries. When Jeffrey Gundlach, the bond king, says, "Let's just take all of these guys," he means that whether it's Morgan Stanley, Goldman Sachs, Jeffries, or himself, they are planning to move money from bonds to gold. That's when people should pay attention. This is how these people left their impact, and now they are pulling back from it. No say. I believe the key factor is that they are talking to people at the institutional level. No le están hablando a mamá, papá. They are talking to their clients from institutions. Michael Hartnett's letter is expensive, and the analysts from B of A are repeating 25, 25, 25, 25. Who has ever heard of that? Hasta ahora. You might wonder who is buying all of this every month. Every week we are seeing billions and billions coming into the COMEX. Vince Lancy, who is very smart and knowledgeable in the industry, says that 85% of the gold bought by central banks is not reported to the IMF. They are bringing it in through different methods, such as China is purchasing doré and concentrate, as Sean Kun from Dolly Varden will explain, from miners in Latin America and Mexico. They are extracting gold and silver before it's fully refined, as it's still in concentrate and doré form, then shipping it back to refine it themselves. Well, that doesn't activate IMF reporting. It's below 999 fine. Or purchasing it from different places in the world, possibly using proxy banks or sovereign wealth funds that avoid detection. This involves using small local miners to bring it in without going through the central bank channels, so it doesn't get reported. All I'm saying is that the richest people in the world have been doing this for a long time and are coming up with more creative ways to do it. What's different now is who is actually bringing it into this country. If I had to make a guess, it might be a guess again. I would say it's the Treasury Department pretending to be the Exchange Stabilization Fund so it can operate quietly. No le digas a nadie que es por seguridad nacional. Now I believe you should also interview Tom Luongo. He has a really interesting opinion. Trump thinks or believes that European aristocrats were responsible for any view of election interference and a color revolution in this country during the last administration. And he's looking to target the Bank of England and the banks in London that have big short positions. Could the returning gold be used to cover the bank's short positions in the US? When they short on COMEX, they go long in London, bring it back, and label it as tariffs. No son aranceles. Never has it been about tariffs. It's been about bringing jobs back home. Maybe if you're interested in the connection between conspiracy and reality, and I'm leaning more on Tom's views here, there's a fascinating idea to consider. The gold that's returning might be used to cover the short positions of banks in the US. The thought is that this gold will eventually go to the Treasury for their plans regarding gold revaluation, or linking it to the bond market, as I believe, and to help balance their financial situation. We are very close to a major moment in London, where the supplies, especially of platinum and silver, are down to less than 1 day's worth of trading. If these delivery requests keep coming, it poses a serious threat to some of the largest banks in Europe, and Trump is targeting them. Thomas is suggesting that Trump is going after the Bank of England and wealthy bankers in Europe by potentially causing a delivery failure in London. This could quickly start a chain reaction that might collapse some of the biggest banks in Europe, similar to what has been quietly managed in the United States. Could that occur? No say. What I'm saying is that the amount of gold coming into the COMEX every week is unprecedented. For the first time, we are really net importers of gold, except during World War II when other countries sent us their gold due to the World Reserve Standard. Since then, the US has usually been a net exporter of gold. In my career, which has lasted almost 36 years, what Vince is saying is that a lot of this gold is coming in through methods that don't raise alarms, like using proxy banks and sovereign wealth funds. What's interesting is that when you discuss how useless mainstream media is, which has only promoted division in this country, you'd expect that when the United States starts importing more gold than it exports for the first time since World War II, over 150 billion since November, this would be a big deal. And, there's much more coming in. But the questions aren't being asked. Who is doing this? Although markets are meant to be anonymous, what does mainstream really mean? Why do you need to learn about this from alternative media, and what does it really mean? I think some of it has appeared by now. It did appear, but not everything is being reported. The goal was to use gold and bring it back into the monetary system, and we are seeing this happen in many countries in the global south. It is being integrated into the plans for the settlement system of the Shanghai Metals Exchange, which is expanding its vaults across the Belt and Road Initiative. The first one was built in Hong Kong, and another is being built in Saudi Arabia so they can trade in their local currencies using bridge technology and settle transactions in gold. China is also working to make the yuan more international by having the digital yuan be directly convertible into gold, instead of converting back to dollars. Esto será la base de su sistema de pagos. I think gold will play a different but equally important role in the United States. Regarding its money future, I believe that gold will be brought back into the monetary system. Additionally, the US government has labeled silver as a critical mineral. This means there is a huge supply of silver, with literally billions of ounces coming in every week. Now it is an important mineral. As far as I see it, they have set a minimum price. Las cosas son diferentes. For the first time, the main focus isn't on the US treasuries. Actually, the people who are promoting this are suggesting that we might want to step back and consider buying gold. The emphasis is not on these traditional assets that are currently changing. It feels different in a way that supports legitimacy. It highlights legitimacy rather than endlessly struggling against it. It's as if we have support from the top financial sources right now. That silver is going to rip the lid off of the market, as he goes on to say, it is revising sharply upward in their mind. And that the technicals of both price and long-term momentum, he believes, are telling the market what is already occurring and what's about to occur, a repricing, he says, of silver's reality, whatever that means. So I've never heard of soul bullish on silver. He was saying about if it follows the previous cycles of 2010 and 11 or 1979 and 80, you can get as high as $100 or $200 on this move on. But it's interesting if you take the 45-year cup and handle of silver, which is now literally almost a double cup and handle, And 45 years, one of the most powerful technical moves, period. In technical analysis, the way that you would figure out where the next stop is or where the target would be. And even if this analyst who was looking at it didn't know what it was, is you take the top of the cup in 1980, goes down to the bottom in the 90s to $4, goes back up to 50 in 2011, comes down, and is making that final push when it gets through that 50 level. You measure the distance from top to bottom, which is 50 minus 4, giving you 46. Then, add this to the top number, so 50 plus 46 equals 96. Your next goal is $96. Eso es lo que está diciendo Michael aquí. Más de 100, él cree que si lo comparamos con 2010 y 2011, así es como acabaríamos. The precious metals market has changed from a quiet period to a strong demand, as both retail and institutional interest come together in new ways. In the last 9 months, gold and silver imports into COMEX have reached record highs. This increase matches the rising acceptance of gold as an important part of investment portfolios by institutions. Big banks, asset managers, and market strategists now openly recommend that gold should make up 20% to 25% of traditional portfolios, which is a significant change from the usual 5%. This change highlights a significant shift in how people keep their wealth during times of financial uncertainty. At the same time, flaws in official data show how serious the economic situation is. Inflation is still much higher than what is reported, job creation numbers keep getting lowered, and government debt is growing rapidly in an unsustainable way. With real returns on treasuries now very negative, global investment is slowly shifting to hard assets. The lack of freely available silver on global markets, along with its recent designation as a critical mineral, makes the situation more urgent. The financial system is moving into a phase where true price finding may finally happen, which could have effects that go beyond just metals markets. Volvamos a la entrevista. In the retail market for precious metals, sales have shifted from a very slow pace in recent months to a rapid increase in volume. There's a noticeable growth in interest. This could be related to the large amount of metal that has been brought into the COMEX in the past 9 months, at levels we've never seen before, and that is related to what we've been discussing for a while about the central bank purchasing. You start to notice comments like the CIO of Morgan Stanley saying that a 60-40 allocation isn't great anymore. Instead, they suggest a mix of 60% stocks, 20% bonds, and 20% gold. Jefferies, a major trading firm, expects the market to be at 6,600. Michael Hartnett from Bank of America thinks the right mix should be 25% stocks, 25% bonds, 25% short-term treasuries, and 25% gold. Goldman Sachs has stated that if the Federal Reserve shows any sign of losing its independence, it will be concerning. But what does Stephen Mirren, who took the recently opened position and is the author of the Mar-a-Lago Accord and a Trump advisor, have to say about independence? I believe there are many signs showing that a lot of big money, especially from institutions, is heading this way. Jeffrey Gundlach, known as the Bond King, states that having 25% of gold in your investments is not too high of an allocation. Throughout my career, 5% was given in agreement by the financial advisors to satisfy their clients who were interested in gold. 25%? When the biggest money sources in the world, from Tether to commercial banks to central banks to the Bond King, say, "We've done well with traditional assets, but you should consider how much gold you have." It's important to take notice. Something has changed, I swear. Also, consider all the imports into COMEX, which is like having 5 feet of snow in Death Valley in July. An unusual situation every month with billions and billions of dollars worth of gold and silver arriving at COMEX. Something is quite different. For the first time in 35 years, I really mean that. Algo es muy diferente. You know, the markets have been looking for these big numbers for as long as I can remember. If I go through all the 2000, it would just keep hitting it over and over, and once it's through, it's gone. It just depends on how many times it takes to challenge it. I would say that 50 is really just a mental thing. If you look back at 1980 and 2011, it took a short time for the price to reach 50 in both cases. So, what kind of resistance is there besides, psychological? And, Kai, who really knows what the true price of gold and silver is? It's clear that the central banks in the West have kept the prices of gold and silver low for a long time. I believe that you can control a market for only a limited time by influencing its direction. And it was easy for the West to do this for a long time. But you have a whole bunch of players around the globe that are coordinated, motivated, sophisticated, wealthy. They know what we're doing. By holding down the paper price, they're standing for delivery largely in London in order to beat us at our own game. And now the folks in the West here, the big traders might. Either they were tapped on the shoulder and said, start bringing this shit back. Pardon my French, and you can call it tariffs. All you want. Fool the public. It's not tariffs, it's about reshoring. Get it back, and that's what they're doing. It's easy for people like you and I and the people listening to the show to get wrapped up in recency bias. We've been beaten up so badly over so many years in an environment that was counterintuitive to logic and our belief structure, but our belief structure and logic and mathematics have a way of playing out over time. You can't hide from math, and a lot of this is just, and a lot of simply math and logic, and it's finally playing out. I think the sky's the limit. Entonces, ¿rebotará en 50? Finalmente. Will it do it the first time? Perhaps, perhaps not. No tiene importancia. I believe that once it gets through, the possibilities are endless. Claro, debería. What you can observe from the CPI numbers and the Bureau of Labor Statistics, which we might as well call the BS, is that there are two main points to consider regarding their adjustment of employment numbers. First, inflation is much higher than what we are being told. Just ask John Williams from shadowstats.com. He'll say to add 8 to the 3% we're discussing. That's 11%. And the unemployment figures are much worse than what we have been told. And it is intriguing. They continue to release these numbers. The market responds. Our economy is doing really well. And then they quietly lower the numbers to the biggest changes ever. Month after month, they're removing hundreds of thousands of jobs that we believed were created. No, not really. Our model was just incorrect. Lo siento. The market has already responded. I believe it's clear that we are moving towards stagflation, which means a slowing economy linked to rising prices and inflation. And it's truly the hardest part, or the hardest result. Prices are rising and growth is slowing. It's scary to see that the job market is actually becoming weaker. Now the Fed has to decide what to do. Bajamos las tasas? If we keep reducing rates, what message does that send to the rest of the world? Does it mean we've lost all hope for austerity? We just tighten it a little bit, and it all falls apart. Are you going to harm the job market? And then start the inflation problem again when we haven't reached our goal for 53 months and the figure we share with the public is not true anyway? ¿Qué haces? This is the situation the Federal Reserve is facing, which is why I believe we will notice similar things happening in Canada and London. The front end of the market is going down due to rate cuts, but the back end is saying no. They're planning to go in the opposite direction because they won't keep any of your long-term treasuries unless the rate is much higher. In other words, can the Federal Reserve control long-term interest rates using yield curve control? Yes, they likely could, and that is something everyone should be scared of. If that doesn't happen, the market will require much higher interest rates to take on the risk of holding our debt, which keeps increasing. Our financial irresponsibility is really shameful. Creating almost $1 trillion every 100 days won't be accepted by the rest of the world. If Trump is able to reduce rates enough, you'll attract a lot of money that has agreed to invest in short-term treasuries. Right now, the target rate of 2% for federal funds is lower than the CPI, which is nearly 3%. They will not accept that. And there's your 1% rushing to gold. And from a reality perspective, we are already experiencing that with inflation. The dollar has dropped 11% this year. A 4% short-term treasury, halfway or 3/4 through the year, is returning 3%. The dollar is down by 11. Your real return is negative 8%. Meanwhile, silver has a return of 50% or higher for the year. This is the trend we see worldwide. The largest amounts of money are always 3 steps ahead of everyone else. They have been selling their treasuries and buying commodities. During this whole time when others were saying we were foolish, I felt that we were being proven right. See what the smartest traders in the world are doing quietly before the rest of you realize it. And I don't mean foolish people. I'm talking about those in the mainstream who make fun of people like us who have different views. Instead of keeping an open mind and recognizing that things are changing, they ignore the fact that we can't keep acting the same way and being financially irresponsible without facing consequences. We're starting to see those consequences now with the drop in demand for the US dollar. So I have a suggestion. Let's create something called the Genius Act. We can use it to support the front end of the Treasury market by creating synthetic demand through stablecoin production. We're reaching the final stage of the game where things are going to become very interesting, and I believe it will happen quickly too. Now, my focus will be on gold, silver, and real value, as well as platinum. The true value is likely in platinum and silver, even though the prices for pre-1933 gold coins are the lowest I have seen in my career. It is very valuable. The true value is not silver. The word is asymmetrical. There is a low risk but a huge potential gain. The LBMA is almost out of all its available silver, which could easily cause a chain reaction and a big price increase. Billions of dollars worth of silver are entering the COMEX every week, and the US government has reclassified it as a critical mineral. This is something to think about. It doesn't have to only be about my viewpoint. Many people might consider cryptocurrencies as a way to protect themselves from a falling dollar. The main point is this: if you are saving money, there's a very high chance that you will lose value in what you can buy. We've already noticed an 11% drop, but pay attention to what Stephen Meir, the creator of the Mar-a-Lago Accord, is saying. He is currently on the Federal Reserve and still advises Trump. The main goal is to lower the value of the dollar to bring back gold. What did Vice President Vance say about bringing manufacturing back to the country? What did Vice President Vance say? Triffin's dilemma shows that having the world reserve currency is no longer beneficial for us. It is financial support for the consumer and a burden for manufacturing. No es un buen trato para nosotros. What does Trump say about having a strong dollar? Sure, it's nice, but you really don't have much business or tourism. They are saying that they want to lower the value of the dollar. Es la única forma de saldar la deuda. It's the only way to have any chance of success in manufacturing. Es el único camino que queda. Tómalo. Next time we have more time, we'll discuss other things related to that. But I lower the value of dollars on the cards, so do your best to gather assets, whatever that means for you. Avoid keeping your money in dollars. It's not a good situation right now. The changes happening in the gold and silver markets are not just a short-term trend. They represent a fundamental change in how capital is organized due to rising debt and monetary policies that have gone further than ever before. At the same time, global institutions are quietly moving towards tangible assets. The forces behind this cycle are greater than any one event. The limited supply of silver and gold's return as a key monetary standard suggests a financial change that might surprise many people. As this story develops, keeping updated will be important to stay ahead. If you appreciate clear insights, please like this video, subscribe to the channel, and share your thoughts in the comments below. Your participation helps us keep providing you with important updates.